All right. Happy Sunday, everybody. Welcome to the Token Metrics anniversary special. Token Metrics is turning 1 year old. Thank you to everybody for being with us alongside this journey. This is going to be quite the stream. We have a lot to cover. We'll be covering Bitcoin price predictions, Ethereum price predictions, taking questions via the AMA, and Bill will also be sharing his market update. Bill, how are you?
I'm doing good, sir. Thanks for having me on the show, and happy birthday to Token Metrics.
Yeah, absolutely. Absolutely. Bill, I think the audio is kind of high. Could you maybe just turn it down? I'm not sure if that's me or that's you. But tell us how, so to everyone who's watching the stream, let us know if there are any issues with the stream in the comments below. Just give us a few minutes. We'll be starting shortly. We just want to double check a few things to make sure we're all set, locked and loaded.
Okay, how am I now?
Okay, yeah, I think that's... Okay, yeah, that's better. That's better. All right, but maybe lighting is too much. All right, so what's up, Dragon Ball Crypto? How are you? Florian, Alice, David, Brett, how are you? Harris, Tree, or Try? Okay, so my level is quiet. Okay, let me see if this changes it. How about now? Let me know how my audio is, everybody. Let me know. We're making a few changes here, so bear with us. And we also do have a Menti code, so stay tuned. We'll be giving that out shortly. Okay, let me know how the audio is. Is the audio fine? Is it loud? Let me see if this changes it. Okay, yeah, audio is all good. Audio is all good.
All right, how do I sound? Am I coming through?
Yes, maybe slightly turn it down slightly a little bit, then you'll be all set.
Okay, there we go.
Okay, all right. So obviously live stream always having issues, but no worries, we're here still. First of all, thank you to everybody who has taken advantage of the Black Friday Cyber Monday promotion. As we mentioned last time on Friday we had a record for most new trials and most new customers. And so thank you to everybody who's taking advantage of that. Once again, that expires tomorrow. So there's 1 day left. That gets you 40% off of Token Metrics. So if you haven't yet taken advantage of that, be sure to go to tokenmetrics.com and put in the code anniversary 2020. That's all caps, one word, anniversary 2020, and get 40% off of Token Metrics. That promotion expires on Cyber Monday. That's Monday at 11:59 p.m. Eastern time. Right. So if you haven't yet already, tell your friends, tell your crypto family members that now's the time to get Token Metrics at basically a steal. Right. So thank you to everyone who's joined. It's been good. Okay. Hey, Tom, how are you? Great to have you here, Tom. Thank you for being an investor. We appreciate that. And customer, hey, Arbin, how are you? Okay. All right. So I think prior to hopping into the show, let me just pull up the deck here. Give me a few seconds here. All right, so if you have any questions you would like to submit, please go to menti.com. That's MENTI.com. Use the code 6583846. That's 6583846, and submit any questions you have for the AMA. And as usual, everything we say here is just our personal opinion. It's not financial advice. As usual, always do your own research. And be sure to join us on social media. So follow us on Twitter, on Instagram, YouTube, Facebook, LinkedIn, and we also do have a podcast, tokenmetrics.com/podcast. So download us on the go when you're working out at the gym, driving your car, or just doing any activity around the house. Listen to us on the go. All right. So with that being said, as we mentioned, this is our anniversary special. So prior to even starting, Bill, do you have any words to our audience for the anniversary?
Yes, I want to extend my heartfelt gratitude to all of our customers and all of the people who watch us on this live stream. without you, it's me and Ian talking on Zoom. So we sincerely appreciate you tuning in, and we want to let you know that as crypto matures and as the rally hopefully continues, we will be there for you. Join us.
All right. Absolutely. Absolutely. Thank you, Bill. And same thing to everybody, because let me just make sure I have this. Just give me 1 second. We are very thankful to have each and every single one of you as customers, as subscribers, as crypto family members, because we launched Token Metrics on Black Friday last year, November 29th. And it's now been 1 year, and this rocket ship is just getting started. And it's such a joy to have each and every single one of you, because we launched this channel on YouTube when we had, I think, only about 500 people from my personal channel came over. And now 1 year later, we have over 16,000, almost 17,000 people on this channel. Our channel has been growing over 20% month over month. And this month to date has been our best month on YouTube ever. So we're so grateful to have each and every single one of you tuning in to our content. Because as Bill mentioned, I mean, this is just me and Bill here, just talking on Zoom halfway across the country. But soon I'll be joining Bill in Texas. For those who don't know, I'm moving to Texas beginning next month. So if anybody's in Austin, let's link up. Bill and I will be closer to each other as well. But it's going to be fantastic, because this is what we've done in 1 year. We launched Token Metrics. We launched the indices. We launched the new quant grade. And now we're getting ready to launch amazing things. We can't share everything, but we have so many great things coming up in store for the second year of Token Metrics, because now we have customers in over 50 countries. We're global. Crypto is global. So, I mean, it's a pleasure having each and every single one of you here. I'm very, very excited because our product gets better and better every quarter, every year, based on us listening to the customer, you and our audience. Because this began as just a spreadsheet, but from us realizing that this is a huge problem for everybody, how to efficiently allocate capital in crypto, and now turning it into this platform, and now turning into this movement. So from the bottom of our hearts, we're very, very thankful. And that's why we definitely want to make sure you take advantage of that coupon, right? So somebody said, does that coupon apply towards monthly plans? Yes. So it applies towards annual and monthly plans. If you use it for monthly, it would only be for 1 month, because it's a one-time single-use coupon. So I highly encourage you, if you can, to get the annual plan. That way you take full advantage of the 40% off for 12 months. Plus, if you get the annual plan, you also get an extra 25% off, right? So you're basically getting massive savings. You're getting the 25% off for using the annual plan, plus an additional 40% off. So that's how much we love everyone here. So that being said, I think let's get into the show. All right, Bill. So how's the market looking? I mean, are we still in a correction?
Okay, well, that is the question of the hour. All right. Let's start off with how I use Token Metrics to get ready for the show today. Okay. So a lot of our new features are out. Okay. The answer to your question is yes, I believe the correction is over, although I don't think it's time to go full cowboy, except maybe in Ethereum. And I'll get into that. So let's begin with how I started my day with Token Metrics. So I wanted to see what Token Metrics had to say about some of the bigger coins that were out there. And I wanted to see what our new monthly quant grade had to say about it. And one thing that I noticed is that, Bitcoin scored up at 92% and Ethereum scored at 90%. And a lot of the other coins beneath it, some of the bigger ones, were in the high 80s. And I've seen pretty decent rallies kick off with those kind of scores. And I'm wondering if from Ethereum on down, the scores can actually catch up to Bitcoin. All right, so let's talk about Bitcoin. And let me give you a lesson from markets past, something that I kind of had to learn the hard way. In equities, when QE started, the 21-day moving average became this sort of like holy grail of market momentum. And there would always be this classic repeating pattern. It took me a while to figure it out, but it's pretty simple. You take the market, you have it run below the 21-day moving average, triggering stops and fear. And you might, as Bitcoin did, do it 2 consecutive days. Oh, and by the way, they did it over a holiday. Nothing like getting a notification on your phone that the market's down 15% while you're trying to eat dinner. Scared everyone. Then, as with stocks in the QE era, it would slowly come back above the 21-day moving average. Like yesterday's move was kind of slow. You didn't know if it was going to be, a good rally or not. And then it accelerates. And then everyone who either sold out or the bigger players who didn't get everything they needed, they start piling in. And I'm seeing the same price action in Ethereum. Okay. And with ETH, the price action's even better. All right. The green wavy line is the 21-day moving average. Okay. It's, the Sunday after Thanksgiving. So if you're tuning into this at a later date, we're at a point where momentum and stochastics for Ethereum are, crossing up bullishly. And the black arrows show you in this uptrend what ETH has been able to do every time stochastics have crossed up bullishly. Now, in ETH, we have a couple other developments I want to tell you about. First of all, ETH came down and retested the old DeFi high around 475, right? I mean, all of that thunderous selling was nothing more on charts than a retest of an old high. ETH also hit the wavy green line at the 21-day moving average, again, the Sunday after Thanksgiving, and rocketed up, okay? Now, if you go to look at this on a 2-week chart, right? So we're starting to zoom out. Where's the resistance in Ethereum? It came down, it retested this big point. By the way, that DeFi high, that was the place where ETH crashed from in 2018. That like 480 point where it made the low was a huge chart point, both on short-term charts and long-term charts, okay? So ETH is looking like good, like long-term. And I'm not surprised if it's up 6%. And I wouldn't be surprised that as soon as Bitcoin futures open, right? Remember, they didn't trade over the weekend. So everyone that went home short on Friday, not pretty, right? They're going to have to buy something to cover. Now, let's talk about Ethereum versus Bitcoin. One of my big themes is that there is going to be not only a big rally in ETH, but there's going to be a big rally in Ethereum versus Bitcoin. Now, as you can see on this chart, again, Sunday after Thanksgiving, ETH versus Bitcoin hit its 21-day moving average. That's the wavy green line. And then, as you can see today, it's outperforming and it went straight up. Now, as with the ETH 2-week chart, this is the Ethereum versus Bitcoin weekly chart. Okay. Again, Sunday after Thanksgiving. And this chart shows a head and shoulders bottom pattern developing. It hasn't been confirmed or triggered yet, but we have a saying on the show that the bigger the base, the higher in the space. And this chart, really, you have to think about what does it mean? So if Bitcoin could make a new high, if Bitcoin could go up, which it can, then if the ETH can go up so much more. Like ETH can go up literally massively if this market took off. So if this thing shook you out and scared you into stable coins, which it did for everybody, right? The thing to get back into is probably ETH. Because I think ETH 1000 is not out of the question before the end of the year. I'm going to be straight with you. right? There's no reason why ETH can't 1x. Now, let's take this to another chart to try to get confirmation of the idea. So Bitcoin dominance, okay, the momentum indicator or stochastics has rolled over. And Bitcoin dominance, as powerful as this Bitcoin rally has been, has also turned over at a big resistance point near, say, 68%. And this is very reminiscent, believe it or not, of April 2017, when Bitcoin dominance rolled over in April, when alts really took center stage. So do I think everything is okay for Bitcoin? Yeah, everything looks good for Bitcoin. But the whole ETH alt complex is probably going to be where the action is at if the market continues to go up. Okay, now, one thing I noticed from the token metrics indices over, say, the last month is that you've gotten a lot of clues from the day trading indices where they give you signals over a period of days for, say, the same coin. And when that coin potentially takes off, it can become a hodl or like a 2 or 3x. I saw this with Uni, and I saw it with Yearn when the market bottomed previously. Okay. Now, just one thing that's catching my eye, because again, we've revamped our system, is that for Binance, our day trader index is highlighting Bitcoin Cash and EOS as big holdings. And I was like, let's check the charts. Let's see if that makes any sense. Now, if you look at EOS, it did a lot like what everything else did. It hit its 21-day moving average, okay, and then it came back. Now, is this perfect? Is this the first choice I would make as a human? No, it wouldn't be. But our AI is picking up on something, okay? So if you like to trade and you like to speculate, this might be a place to say, hey, I wonder if this thing could go from 2.8 to 5. Okay. This is just an example of me mixing AI with regular charts. Okay. It's getting me to look at something that I might not normally look at or think about. Now, the other one is Bitcoin Cash. Okay. Now, crypto is going mainstream in a variety of ways, including payment. Okay. More on that later. But Bitcoin Cash has done something very similar to what everything else has done, except Bitcoin Cash just broke out of a gigantic triangle formation right at the apex of the triangle. Now, I know that's a lot of chart jargon, but this could go up a lot. Okay. So we're at the Sunday after Thanksgiving. Bitcoin Cash isn't doing a whole lot today, but if I followed RAI and I said, all right, I was going to allocate, 5% of my portfolio towards something that I thought might make kind of a face melting rally, at least on the big coin side, this might be something to consider. All right. Now, Litecoin, God, the volatility in this thing is unbelievable, right? This goes from 92 to 64. And then comes raging back again above its 21-day moving average. Now, you'll notice, if you come over here and you look at some of these candlesticks below the wavy green line, Litecoin scared the daylights out of everybody. Okay. It got everybody out before it turned around and went higher. So again, on the Sunday after Thanksgiving, if Litecoin can actually take out 80, I don't know that I'd FOMO into it right this second, but if Litecoin actually was able to take out 80 and stay there, stay above it, you could have ignition for the whole space, because Litecoin, like it, don't like it. It's been a really good leading indicator for all of crypto. Litecoin usually moves first. Now, Chainlink, all right, the Sunday after Thanksgiving. I got hurt on this. I thought this was going much higher right before the correction. Okay. But like anything in TA, I took a deep breath and I redrew this pattern that I'm seeing where I think Chainlink is in this accumulation phase. This goes back to a very old style of analysis from a book called Reminiscence of a Stock Operator. It was essentially the first trading guide ever published. Okay. It was a story of a famous stock trader. And in Chainlink, I think it's almost like now or never, right? If Chainlink is going to follow ETH higher, in other words, if ETH is going to double and the rest of the alt space goes with it, then now is Chainlink's time. And I almost feel like it's sort of now or never, because believe it or not, on this decline, it actually made this Chainlink kind of accumulation formula look even better. So I've been thinking Chainlink starts a move to 30. Doesn't happen immediately, but I'm thinking it's still good. Now, another alt that we like is synthetics. And again, I'm noticing a pattern where, you know, synthetics goes up and then it comes all the way down on the DeFi correction. And then in early November, synthetics popped up, okay, and then it came back again. And that stop, start type of formation has led to bigger up moves. Now, I know that our quant grade has liked this. So I think if you're looking to go shopping in altcoins, this could be a sleeper, okay? I don't know that it's going to moon, but it's very interesting how the charts sort of seem to set up along with our quant grade. All right, now, in this next section, we're going to talk about what's old is new again. Okay. Once upon a time in the glory days of hedge funds, right? If you wanted to get a really big return, you had to give your money to somebody like George Soros, Paul Tudor Jones, Stan Druckenmiller, right? These guys would be able to take advantage of big swings in currencies and bonds. Okay. And these guys got famous and were featured in books called Market Wizards. Okay. Well, guess what? They're back. And they're back in crypto. This is from a famous newspaper, Barron's, right? Like the legacy weekly publication. Okay. Now, I've been advocating that there's something going on in Bitcoin and crypto called monkey see, monkey do, right? If one big player is doing it and their fund outperforms, all the other funds are like, oh no, I've got to buy it too, so I don't underperform, so I can join the party. Okay, and I want to read this. This is from Paul Tudor Jones. That hedge fund manager who doesn't know much about Bitcoin and has never owned it, they're actually a week away from buying it. We're at a point in time where it's established enough and validated enough that basically if two of their billionaires' buddies tell them, and they hear from me for 30 minutes explaining why it might be an interesting value proposition, they're often ready to make a purchase. All right. So it's no longer a guy on YouTube with a theory. It's been published and the hedge funds are talking about it. Now, let's go to something else I found, a little hidden gem from a friend of mine. Guggenheim, a major investment company. Okay. They're talking, they have a $5 billion macro opportunities fund. These are the type of, funds where you really needed to make your money in the 80s and the 90s, right? With a big hedge fund. They're talking about a 10% investment in Bitcoin. That's $487 million. And that's $200 million larger than their next biggest position. So not only are they getting long, okay, they're getting long in enormous size. So let's bring it back to this weekend. Thanksgiving night, Wednesday, your friendly neighborhood technical analyst sitting in front of his computer going, Oh my God, what is this? We're down on some Coinbase rumor about a rumor. Okay, Coinbase is down. Oh my God. People, over-the-counter desks that are getting orders from these huge players are probably not sleeping at night. They're probably wondering, how are we going to fill these orders? Well, they had to orchestrate a stunt. It's very old-fashioned. It happens all the time. You orchestrate a stunt for the market to go down. All the stops get triggered. Retail sells. And who's down there waiting for you? Tudor, Guggenheim, and all these really big players. Now, speaking of big players, let's talk about the biggest one of all, Uncle Sam. So there's all this talk, the Treasury is going to regulate wallets, blah, blah, blah. U.S. Director of National Intelligence. Let me say that again. U.S. Director of National Intelligence urges SEC to support Bitcoin and crypto companies. Okay. That means our intelligence community wants cryptocurrencies to be around in the event that there is either a financial crisis, a problem with the dollar, or both. In other words, having crypto be viable inside the United States seems to be a national security priority. So all this time where I've been pounding the table, I did this like TV interview with Kitco where I was like, people need crypto to protect their purchasing power, right? If crypto is in your PayPal account and crypto rises in value, you have more dollar purchasing power. Uncle Sam now thinks that that's a security priority. And remember, the primary job of government is to protect the people. In crypto, we kind of give governments a hard time, sometimes rightly so. But this is an example of Uncle Sam being really smart. Now, let's take a look at the macro picture and some of the things that impact crypto so that we can say, okay, are stocks and bonds, are they giving signals that are friendly or not friendly? All right. So unfortunately, a week ago, 787,000 Americans filed for first-time unemployment claims. Okay, that is a shockingly huge number. And as a result, interest rates on the 10-year government bond have fallen. Now, this is good for crypto. Rising interest rates hurt Bitcoin and cryptocurrencies in 2018. So if interest rates stay stable or go lower, that's good. And it's also a sign that the Federal Reserve is in pumping money into the system. I wish I had saved a tweet. I don't know if it's true. I heard the Fed's putting $1 billion an hour into the system. Okay, now that may or may not be true, but check out New York NYSE FANG Index. Okay, so this is your Google, your Microsoft, your Apple, Netflix. Okay, this is the Sunday after Thanksgiving. And from looking at this chart, the FANG stocks are making like a triangle, and there's kind of nothing but green, which means only one thing. The Fed is in. Okay, so in conclusion, if crypto washed you out and, you want to be a little bit more conservative, you can hold stable coins and then try to jump into alts in a week. Or you can wait for some of our portfolios to switch over at the end of the month and end of the week and see what they say. In the meantime, I think ETH is the play. So that is the Sunday extended birthday version of the market update.
All right. Awesome work, Bill. Awesome work. So if you enjoyed that market update, be sure to like, subscribe, and share with your crypto family. Also tell us what you think. Let's take some questions here or some comments from the audience. Let's check in here. Awoken says, makes sense. Samir says, love you, Bill. Let me see here. Then Mark on Twitter says, in the long term, do you infer ETH will outperform BTC? Okay, good question. What do you think, Bill?
Yeah, I mean, I think on a percentage basis, like in terms of like how much it can go up in percentage terms, like, you know, Bitcoin can go up 30%, ETH can go up 200%. That's what all the charts seem to indicate.
Yeah, I mean, I agree as well. I mean, I'm kind of tweeting, I'm kind of becoming a broken record here, but I'm very bullish on Ethereum. I think Ethereum is the future. If Ethereum can do what they want to do with ETH 2.0, it's Ethereum's race to lose, I think, in terms of becoming the biggest cryptocurrency in the world. Because if ETH 2.0 happens and they can scale everything happening on Ethereum, that means DeFi scales. That means all these institutions coming into blockchain and crypto will be using Ethereum. Because Bitcoin is really now becoming solid as a store of value, and it can't really do all the other use cases. Ethereum is meant to become a virtual computer. So if anybody wants to run applications or make them decentralized, they have to use Ethereum. You can't do that on Bitcoin. You can't build Uniswap on Bitcoin. I mean, so because Bitcoin was not designed to do that. Bitcoin was designed to be now a store of value. So I'm very, very bullish on Ethereum. I still stick by my claim that by 2030, Ethereum will be larger than Bitcoin. Now, I'm not saying Bitcoin is horrible. Bitcoin is still great. Bitcoin is great technology. But I think Ethereum is so much more, so much potential. And I think once all these institutions begin to FOMO into Ethereum, that's when people will be on yachts. I mean, because kind of all these institutions have been late to Bitcoin. Now, when they discover that, okay, maybe Bitcoin is too late, what about Ethereum? Once ETH 2.0 starts, I think once we get maybe into phase 2, because right now we're at phase 0, because there's phase 0, 1, 2, and 3. I think once we get towards the tail end of Ethereum actually launching, all these institutions will have to just get in. Your take on that, Bill?
Yeah, you said it exactly right. In other words, anybody who's like, okay, I miss Bitcoin, my investors might give me a pass, or my boss might give me a pass if I'm an institution, right? But if I miss ETH and ETH does a 1x, then I'm done, right? So they can't miss any big rallies on the market cap chart underneath Bitcoin. They just can't, right? And this whole idea in crypto of having to own something, in other words, if you've ever wondered what makes things like Tesla and Zoom stock moon the way they do, it's this whole idea that fund managers have to own it. So if they have to own Bitcoin and then Ethereum starts moving, they have to own ETH. They have to.
All right. And I think people should also have to get token metrics and take advantage of that 40% discount before it expires. So go to tokenmetrics.com, coupon code anniversary 2020. Thank you. Okay. All right. So let's take a quick question here from our audience. Everyone is asking Bill, what do you think about XRP? Looks like we have lots of new XRP, I guess, hodlers on board, because one of our XRP videos last week has gone pretty viral. It's now becoming, I think, one of our most popular videos ever already. So let's pull that up and see what you think about that.
Okay, let me pull this chart up. Okay, and I'm almost there. Okay, let me share the screen. Okay, folks, let's talk Ripple. I actually went back. I was fortunate enough to have this hit my radar. I actually worked in conjunction with our AI. I saw it pop up somewhere. And let's talk about this. Okay. Now, this is a 2-week chart. Okay. So this is kind of a long-term chart, especially for something like Ripple that can just, indiscriminately smoke higher, right? So it's the Sunday after Thanksgiving. Now, with this, there's this idea that the top cryptocurrencies are going to be the new form of money. So to understand the value proposition of XRP, you need to get this fact, right? Dollar, euro, yen, Swiss franc, sterling are going to have kind of crypto cousins, right? That's Bitcoin, Ethereum, Litecoin, Bitcoin Cash, Dash, and XRP. Okay. It's got a fast network. It's got a smart company behind it. You can do is it centralized or decentralized? But the fact of the matter is, if central banks can come in and create their own digital currencies and people think that's a good idea, then why not Ripple, right? All the things that people were saying about Ripple that were negative, well, they can no longer be true if everybody's in love with central bank digital currencies. So Ripple then takes off. It moves past 57 cents, which you can see here was like a big point where, this was sort of the death of XRP right here in November of 2018, or maybe I should say the hibernation, right? So XRP just sort of fell apart at 57 cents. It floundered. It went all the way down to 15. It hits this moving average, and then it just absolutely breaks out. And then it comes back to retest 57 cents. Okay. Now, I know this is a 2-week chart. It's a long-term view because I want this video to have shelf life. But folks, here's the deal. Sunday after Thanksgiving, late November, if XRP is holding 57 cents, I do not see why Ripple cannot go to $1. I don't see why it can't trade at $3. Okay. Because how depressed has this been? Right? I mean, this, you say, oh, wow, 57 cents, that's a lot. Yeah, not really. I mean, look at the last time. Look what Ripple did in 4 weeks the last time it pumped. Now, XRP also helps you with another idea that the whole market, the whole crypto market may be mispriced. What does that mean? Well, that means stuff's just underappreciated, right? Buyers haven't found it yet. Now, again, with the way this woke up, with the way this broke Coinbase, with the popularity of the videos, folks, if 57 cents acts as support, in other words, if people want to buy a dip, because remember, it's not a bull market unless you can buy a dip and make money, right? Any crypto can FOMO up and then it comes all the way back down. But if they buy the dip in XRP around 57 cents, this thing could be for real. Okay. And I think what's good for XRP could be good for the whole space. Okay. It's not just about Bitcoin anymore. Now, I didn't think XRP would grab the altcoin banner and run. But guess what, folks? Our AI saw it. We discussed it. And then it just took off. So anybody out there who's cheering for Ripple, you just keep right on cheering, because if it holds that 57 cent point, it could be the real deal.
All right. Thank you, Bill. So let me just pull up here the new quant grade for Ripple, or XRP. So looking at the Value Investor grade, monthly, it's bullish on XRP at 86%, which is very, very good. If we go to quarterly, it's still pretty bullish. But if we go to 1 year, meaning that 1 year from now is when it gets bearish. So how does somebody interpret that? The way you would do it is basically it's telling us that for the next 1 to 3 months, XRP is going to be a good trade. That's essentially what this says. But if it says yearly, maybe holding XRP for more than 12 months might not be the best investment to make. Now, obviously, it's not perfect, but based on our backtest, this is more accurate than most good traders, right? So it's basically telling you purely looking at just purely the quant metrics at the actual performance of XRP. Right now, it's trending up. So for the next 1 to 3 months, it's going to be a very, very good time to make money on this trade. but don't let this trade turn into a one-year investment. So that being said, tell us what you think. Taking some comments here. I think somebody said they were an XRP YouTuber. Hey, Crypto Mike, how are you? We appreciate the support. Be sure to drop your channel. We'll check it out. Okay, so there you go. If you like that XRP, tell us what you think. Where do you think XRP is going? Do you think XRP is going to the moon and beyond? Post down your price prediction for XRP, and be sure to go to tokenmetrics.com and subscribe. Okay, all right. Let's get back into the stream. All right, so we covered the update. Now let's go to Crypto Showdown. All right, Crypto Showdown. Go to menti.com and tell us what you think. menti.com. Use the code 6283846. That's 6583846. So which cryptocurrency will do best in December? So the options are XRP, Chainlink, and Bancor. We've briefly touched on XRP already. Our models are bullish on XRP. Just to kind of recap here for those who are just joining the stream. So the quant grade likes XRP on the monthly, on the quarterly, and then once we go to yearly, it basically goes down. Right, so basically for the next 1 to 3 months, XRP is a good trade, not financial advice. But Bill, tell us what you think in terms of Chainlink and Bancor. What does Atia tell us?
All right, let me bring up Chainlink because I had a special slide on that. Give me a second. Okay, so Chainlink. We were talking about this in the market update. Okay. Now, Chainlink doing a deeper dive has been a little bit frustrating, right? Link Marines have had to watch a lot of other cryptos go up a lot while Link sort of coiled. Now, in my opinion, this coiling process where Link is in this like upward sloping range, okay, it presses 15 and then sort of fails and comes back to 13. Now, I think this is a prelude for a much bigger move in Chainlink to 30. Okay. Now, that's based on theory that I've seen work before. It comes from early 20th century stock trading. So we will see. Okay. Again, one of the most important things with Link to consider is this. Not only are cryptocurrencies the future of money, right? That's that fiat currencies having, digital cousins. But folks, crypto altcoins are also the future of technology investing. This is our other theme for 2021. And if you're going to look at certain cryptos almost as tech stocks, what better place to look than Chainlink? So even though the Link Marines are out there, right, and we're all for it, Chainlink, it's been underappreciated. And I don't think the institutions get what this company is capable of doing. All right. So Mr. Market will ultimately decide, right? Now, in terms of Bancor, all right, let me pull this up. Okay, my understanding is that Bancor has done some things that make its platform very appealing again. Okay, I don't have the exact technical knowledge to understand it, but somebody has told me that this group may have solved the problem of impermanent loss. Okay, obviously do your own research, and I am not a blockchain person, but I have been watching this closely. All right. Now, Bancor has come out of a downward sloping wedge. That means someone out there has been almost holding this down artificially. All right. And I noticed when Bancor came back down, it didn't quite get to its 21-day moving average, which is really interesting because there could be somebody in here lurking, thinking, hey, this bullish downward sloping wedge, that can lead to some real serious bounces, right? Because when you push it down and you hold it down, when you let go, it can pop straight up. So Bancor has really got to get above $1.14 in order to get really excited about it. But I think this has got a lot of potential. And I also think that Bancor chart means that DeFi 2.0 is coming. All right.
That's great news. That's great news. So let me quickly show the quant grade for Chainlink. And this also does agree with you. It's looking very, very bullish for Chainlink. So on the monthly value investor, 88%, which is very high. If we go to quarterly, it's also pretty good. And even yearly, pretty good. So in other words, the quant grade likes Chainlink monthly, quarterly, and yearly, which is rare right now, right? So it's basically saying almost regardless of what time frame you are, Chainlink is definitely a good addition to your portfolio. Not investment advice, of course. Now, if we go to Bancor, so Bancor on the monthly, it's good, 83%. Quarterly, 77%. Yearly, it gets low. So basically, for the next 1 to 3 months, kind of as Bill mentioned, Bancor is definitely worth looking into. All right. So, and for those who missed it, we did cover XRP in the beginning of the show. Okay, so the winner, wow, Chainlink. The Link Marines have defeated the XRP, XRP Army, Ripple Army. XRP Army loses to Link Marines. Tell us what you think down in the comments below. Are you more bullish on Chainlink in December, or are you more bullish on XRP? Make your voices heard, and be sure to go to tokenmetrics.com and take advantage of the 40% off promo we have for Black Friday and Cyber Monday. Coupon code is anniversary2020, anniversary2020, and get 40% off. Expires tomorrow in 1 day. Okay, all right, let's go on to the question of the day. Okay, question of the day. Is Bitcoin's price correction over? The options are 1, no, a bigger pullback is on its way. 2, it's hard to say. 3, yes, it's time for Bitcoin to rally again. All right, Bill, kind of maybe recap what you covered in the beginning of the show with the market update.
Sure. So let's talk about how hard bull markets can be, right? Bull markets can be absolutely hard as heck to navigate, okay? Because here's what bull markets do. They go up and up and up, and there's huge FOMO at the top. Huge, right? Like everybody thought we were going to have 20K, including me. We're going to have 20K Bitcoin for Thanksgiving. Go sit at the dinner table and watch it go. All right. And then what happens? Then they hit it so hard, especially over a holiday, that it scares everybody, right? Right here where this black arrow is, and it scared everybody so bad, it went below the 21-day moving average. Not once, but twice. And this is what bull markets and equities did in 2010 and in 2011, right? And it took me a couple of years before I figured out this trick. That algos on the institution side will force it below this critical momentum moving average, trigger stops, and just vacuum it all up. And then the price action is so shocking. Again, I was here midnight before Thanksgiving working on charts, only to see this whole thing dump. I had to get it together on Thanksgiving in order to enjoy my holiday. Bull markets will shake you up with the corrections. Everyone's like, oh yeah, I'm going to buy the dip. Except when it's like 15% straight down and it looks like it's going to zero. Because that's what it looked like, right? So And I think people may be afraid to buy back in, okay, because that price action was so severe. And then even if you moved to cash and avoided some of the decline, okay, this speaks to the difficulty of bull markets. You're like, gee, should I get back in? Like, look at the question of the day. You know, people are like, I'm really not sure, or I think it's going to 13K. I mean, when everyone thinks it's going to 30K, it goes to 16. And everyone thinks it's going to 13K, it goes to 30. That's bull markets, right? So, you know, another saying is that markets climb the wall of worry, right? So I don't blame you if you're worried. You know, you watch that decline and you're like, oh, wow, there was some FUD attached to that. And, you know, gee. But markets climb the wall of worry. When there's something to worry about, it can continue to go up. When there's nothing to worry about, that's when you have to look out.
All right. So, question here from Tom. BTC is showing a downward trend into mid-December to about 16,250. If we believe the data, should buyers rely on that projection and wait 3 weeks before buying more BTC?
Okay, so this is, you know, this is subjective, right? So, you know, some of our models are more conservative on Bitcoin, right? They're more conservative in general in recommending stable coins for like the balance of the month. Not all stable coins, but not going full cowboy long. That's why I think ETH is the better play. Okay. I do think it's okay to take a shot at being long Bitcoin. I think you have to be smart and use a stop, treat it as like a trading play. And then if it works out that it continues to go up, great. I also think it makes sense to keep some dry powder. I mean, you know, ETH is doing well, Litecoin's doing well, but I don't think small alts are running away. So if you held stable coins, or if you were like, hey, you know, maybe I won't FOMO in at 18,000, maybe I'll wait for 16 or try to, that's okay. That's okay. People have to manage their own risk, and the best investment strategy is the one that helps you sleep at night, right? So if there's a model that says 16,000, you want to try to wait, no problem. I mean, I think as long as you have some sort of core holding like ETH or other cryptos, so that if it does go up, you can participate. Because I think one of the big myths is that I have to be all the way in or all the way out. I think there's like a middle ground, which some of our indices reflect, right? You can have some stable coin and some crypto.
All right. Great points, Bill. Okay. Thank you, everybody, for the happy anniversary wishes. For those who are just joining, this is our 1-year birthday anniversary. Tokenomics is turning 1. We launched last year on this day, so thank you, everybody, for joining us on the stream. It's great to have you all here. Wow. Okay. And lots of people here on the stream. Be sure to smash the like buttons and take advantage of that anniversary 2020 40% off code we have available for our anniversary. It expires tomorrow. Go to tokenomics.com to subscribe. Okay. All right. Let's actually, whoops, I forgot to announce the winner. Okay, so the winner was, yes, it's time for Bitcoin to rally again. Okay, then followed by no, a bigger pullback is on its way. Okay. Okay, so here's a super chat question. Let's answer that briefly. Okay, super chat from Crypto Mike on YouTube. He said he's a XRP YouTuber. We appreciate. Okay, so hey guys, loved your channel and Tokemetrics. Do you have an opinion on Brian Armstrong's tweets about crypto regulations coming before end of year 2020? Yes, I mean, so let me pull up the tweets here if we can. I think we covered this on the last stream. But in essence, he said they're rumors, right? And when rumors happen, nobody knows, right? I mean, obviously nobody wants this to happen, but as Bill mentioned, the timing was too close. It's almost like these whales put out the rumors to cause Bitcoin to come back so that they could hop on the ship, right? Bill, what do you think?
Yeah, I mean, I was going to ask you about saying this, but I won't do it. People, listen, that's bunk from this guy from Coinbase. Okay. So let me get this straight. Somebody from an exchange that probably has its own OTC trading unit. Okay. Keep that in mind. Normally, the media reports rumors, right? You see it on Coin Market Cap or something like that. When do you get the head of an exchange coming out the night before Thanksgiving saying that I heard a rumor about what the Treasury might do, and then putting out something about, Coinbase refuting a potential New York Times report saying that, they didn't treat their employees fairly? And this is all this FUD, Coinbase related, Coinbase originated, I should say, comes out as this dump gets triggered. Now, folks, I know crypto is the Wild West. And again, this type of thing where big players will try to dump the market so they can buy is as old as the hill. And, we live in a crypto world. So what else is new that governments could come in and not like crypto? But the director of national intelligence, right? The director of national intelligence says, hey, SEC, we need crypto. So I'm with them, not with the guy who's reporting the rumor about somebody else.
Yeah.
I'm not.
No, I mean, but maybe to play devil's advocate, right? The fact that he went out public with this, maybe they had reason to believe that this could actually be legitimate or about to happen, and they want to maybe rally the whole crypto community to kind of protest against this regulation for non-custodial wallets. What do you think about that?
Look, I believe that, it's all one big group in terms of if you're pro crypto, right? This individual who came out with this, obviously he's running the exchange. He's pro crypto. Okay. The timing of it was just a little bit weird. And the way it dropped because there was not a lot of liquidity before a big US holiday. Okay. And, maybe he was trying to get out in front of the government. Maybe he was trying to prevent them from, coming out with it, push back. I don't know.
Mm-hmm.
But what I do know is the market dumped so hard. And then the director of national intelligence and every big hedge fund in the world is coming out with kind of the counter press 3 or 4 days later.
Now, this brings my next question. As somebody who's worked on Wall Street, I mean, because everyone's talking about how crypto needs regulation. But if whales are putting out rumors to get the price to dump to buy the dip, that's textbook market manipulation. That's what we're supposed to be doing in crypto, right? We're supposed to be getting whales to come clean up the space, right? There's irony in that. What do you think about that?
Okay. So again, these type of things are as old as the hill, right? Yes, like starting rumors that to be false are a big no-no in legacy markets. Okay. But, if you think about the way they did this, the guy was like, look, we've heard about this. And if he can substantiate that he heard about it, it's okay. Right. Saying something to push it down so you can buy goes back to commodity markets and hedge funds playing in illiquid markets in the 80s. I mean, yes, outright market manipulation. No, we do not want that, right? Taking out flash loans, crashing the price so you can buy, that stuff's questionable. But, someone putting out FUD just because they're looking to turn around and buy, it's as old as the hill. And it shows, more importantly, how afraid these big players and these over-the-counter desks are. I think that's the bigger point, right? Do we need more regulation in crypto? I don't know, folks. How much more regulated can we get? I mean, everybody's had to go offshore. There's a limited amount of stuff available on Coinbase relative to the rest of the world. Coinbase does have a lot of decent stuff, but come on. People need to protect their purchasing power, and the intelligence community is on record backing me up on that idea. Not personally, but you get what I'm saying.
So when I hear rumors, I think of this cartoon here. So for those who can't see, let me zoom in and try to read this. So it begins with somebody here on the phone saying, I've got a stock here that could really excel. Then the next person says, really excel? Then the next person says, excel? Then the next person says, sell? Then sell, 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 sell. Then it goes all the way down here to sell. Then somebody says, this is madness. I can't take anymore. Goodbye. Somebody says, goodbye. Bye. Bye, 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 bye. So for anybody out there, I think if you're investing or trading on rumors, just hang this up on your wall. Because I mean, that's why we have tokenmetrics, to give you actual quantitative objective data, because it's a very challenging and complex world out there, especially if you're trading or investing on rumors. So when Bill mentioned kind of like this has been around since the beginning of time, this was probably around when Jesse Livermore was trading, right?
Oh, absolutely. Absolutely. These, if you've ever heard in equities, there'll be an earnings estimate, right? Mm-hmm. And then there'll be something called a whisper number. Okay. That means, the company is going to come out and earn $1.30 a share, but the whisper number is that it's actually much higher. Okay. That came from people actually whispering rumors in each other's ear when things were person to person or things were discussed over a lunch table prior to smartphones and the internet. Okay. So again, this whole idea of, sell it so I can buy it, I don't know. It's very old.
All right. So comment here from Tom. At some point in time, wallets held by U.S. taxpayers will be required to tie their names and social security numbers to their wallets. It's not if, it's when. Then Tom goes on to say, I work in the banking compliance space, and government does not want to lose track of taxpayers' income. I mean, that I definitely do believe. I mean, government definitely does want to keep track of everything. And I think that's also why central banks want to issue digital dollars, because then they could track everything on the blockchain. All right, so tell us what you think down below. Okay, all right, thank you for that, Crypto Mike. Let's get back into the live stream. If you're enjoying the stream, be sure to smash the like button, subscribe, and share this with your friends and crypto family. Okay, so now we're heading into the AMA. Okay, so first question. What is the difference between value investor and trader with monthly setting? Good question, good question. So right now, if we go here, so value investor is the quant grade. I mean, everything is quant-based, but just to be more specific, value investor is taking the performance metrics, so the actual performance of a coin. So in this case, if we go to XRP and we go to performance here, we're getting all these data points, all these metrics, and creating a grade based off of this using the AI. Right, so all these metrics. So that's what that is doing. Now the trader grade is for people who are looking to trade. So time frame for this is daily, weekly, monthly, while value investor is monthly, quarterly, yearly. So initially for value investor, we had quarterly and yearly, but we wanted to test the monthly quant grade to see how well that performed versus the trader monthly. So trader is a combination of the price prediction models and technical analysis models. So combining those into one single grade. because before the issue we had from taking feedback with our customers, the TA would say one thing that was conflicting with the price prediction. So we've done some back testing, and we discovered if we combine them, we can get a more consistent prediction, or I would say basically trend forecast that's also more accurate. So as a result, we combine them. Now the weights varies based on our back tests, but last time we back tested this, 85% of the grade was the price prediction and 15% was the TA. That was the ideal weight, but this is always being refined every single day as we optimize the models, because what works today won't work next week, next month, next year, right? So that's why we're always testing every single day, and our models are basically survival of the fittest model. Now we're basically testing the trader monthly and the quant monthly, because currently it's been close, but the trader monthly has been more accurate. However, for the last few days, the quant monthly has been more accurate. So right now we're kind of testing out those two models, and we'll see which one over time, over the next month or so, has been the best performing one, and we'll likely go with that. But we basically have both options here for people to basically decide, right? So actually here, let me see if I can pull up the accuracy for transparency. Just give me 1 second here. Okay, so this is the accuracy behind the scenes. This is not public, but we do plan to make this public through charts that show the historical accuracy of each model. So monthly trader accuracy currently has 55%, weekly 57, daily 61. So right now, okay, so quant weight is getting even more accurate. Okay, so we might have a winner soon, right? Monthly quant weight is 74% accurate, quarterly 79%, yearly 78%, right? And right now we're also testing the daily quant to see if that can be better. So our quant team and machine learning team is always testing new things, right? So this is kind of what we see behind the scenes. So as you see here, combining TA and price prediction is actually more accurate for most of them here, right? But we're also testing the quant rate to see how accurate that is. So stay tuned. We'll keep you posted. But if this stays consistent, then we'll likely remove the monthly trader, right? And we're also working on combining everything into one supermodel, right? But that is somewhat challenging because not everything can be combined. For example, RTA is only for 30 days. That's why we can't really combine it with the quant quarterly and yearly, because doing TA longer out than a month is pretty much guessing, right? But that basically answers the question. Bill, do you have any comments?
The only comment is that, I am spending a lot of time checking our quant grades and comparing them to the charts, right? And, I think that's just going to be a total bonanza for me.
Absolutely. So actually, this question came from our forum.tokenmetrics.com. Be sure to go there and join, post questions outside the live stream. We also do have a Telegram group as well. If you like Telegram, just search for Tokenmetrics or just go to our site and join. We also have a private alerts channel as well. So with that being said, let us know what you think down below. Okay, all right, let's continue on to the next section. Okay, so how much weight can we put on that Secretary Mnuchin rolls out regulation regarding self-hosted? I think we kind of answered this question already. So this one, yeah, we basically already answered this. Okay, are you planning on staking or becoming a validator for Ethereum? Would love a Tokenmetrics video on how to prepare and set up. Thanks. So currently, I don't have any plans to stake Ethereum at the moment. But I mean, I think it definitely is a smart idea. I just haven't done it yet because I've been busy with Tokenmetrics and things like that. But my understanding is, actually here, let me see if I can pull up the best staking guide I found for this. Let me see. Staking. Because there are lots of guys out there showing you how to stake Ethereum. Okay, there's one from Staking Rewards, and there's one from Ethereum themselves. So the one directly from Ethereum, I think is probably the best guide out there. So you can stake your ETH to become an Ethereum validator. They walk you through everything. It's made nice and simple, so even non-techies can kind of understand what's going on. Then there's also this other guide from Staking Rewards that shows you how to do it, and they also go through the different services that help you stake if you don't want to handle the node yourself, right? Because handling a node is pretty technical. So let me go down there here to the different providers, right? So here we go. This is the image they have. Okay, so you could stake ETH on exchanges. So looking at this, Coinbase, Binance, and Kraken, and Bitcoin Suisse will be providing staking. Now, the issue with this is you obviously don't have control. Not your keys, not your coins. Then all these other lending platforms as well will be providing staking. But the cool thing is, because you have to stake, you have to have 32 ETH, right? So if you don't have that, let's say you have just 2 ETH, but you want to stake and participate, you can go to staking pools and do that, right? So you have staking pools, you have Staker, Staffy, Rocket Pool, you have Validator as a service. Oh, there's different platforms here. So there's so many options available. So if I do end up staking, I would likely probably use a pool or an exchange. I would have to do my research, but definitely make sure whatever service you do is one that's credible, that's going to be around for a while. Because for those who don't know, if staking, essentially, you have to wait until ETH. You have to wait for 12 to 24 months. So I highly recommend checking out this article. Let me post this in the bottom of the chat so everybody can check it out. But I think this has been the best guide on Ethereum staking because they go through all the different service providers. Let me see what they said. 24 months, right? So funds are locked up until phase 1.5. So right now we're in phase 0, I believe. So your funds could be locked up for 1 to 2 years. So are you willing to do that? If you're willing to do that, then by all means, go through all these different providers, do your research, and find out which one is most credible. But I think most people would likely use the exchanges because especially like Coinbase and Binance, those aren't really going to go anywhere. But the issue and downside is you don't really control access to the keys, right? But I've spoken with several security researchers, and they told me they actually trust big exchanges a lot more with security than people trying to custody their own funds. And at this point, I think we're now at a level where that could be the case because Binance has their Safu fund, Coinbase. I'm not sure. Coinbase has yet to really be hacked, and I'm not sure if they have insurance, but I know Binance does. I'm not sure if Coinbase has, but the fact that they're in the US and regulated and about an IPO, I would think they would have some type of safe measure. Let me see if I can even search that. Give me 1 second. Coinbase insurance. Okay, so this is what comes up when we search this. How is Coinbase insured? Okay. Okay, all digital currency that Coinbase holds in its online hot storage is insured. If Coinbase were to suffer a breach of its online hot storage, the insurance policy would pay out to cover any customer funds lost as a result. Okay, but do they tell us how much? Okay, so look, I'm seeing FDIC. These custodial accounts have passed through FDIC insurance up to the depositor coverage limit then in place. Okay, so definitely look more into this, but it looks like they also do have insurance, which does kind of appease some concerns. Bill, what's your take on staking Ethereum?
Okay, well, it was really funny that, prior to ETH running up, it seemed like no one was interested. And then all of a sudden, when ETH ran up $100, people suddenly became interested in this program. It's funny how that works. I think when it comes to staking via exchanges, I know I just gave that whole rumor mill thing. I gave them a hard time. Folks, at the end of the day, big crypto exchanges cannot afford to be hacked. If they get hacked, the whole system could crater, right? So they're going to be insured. They're going to go the extra mile on security because they know that the legacy world is never coming over to crypto unless they can present the appearance that funds are protected the way they are inside of a legacy investment bank. So if you're going to do your ETH staking through an exchange, I think that actually might be advisable, particularly if you're talking about what's locked up for 2 years, right? I mean, in 2017, if you told people 2 years later, Bitcoin would hit 3,000 before it would go back to 20K, they would have referred you for mental health. So anything can happen over a 2-year period in crypto.
Yeah, anything. Actually, speaking of that, because some people were talking about our readings not being bullish on ETH. Let me see. For the coin grade, let me just take a look. Give me 1 second. So looking at this, they are bullish. So I guess just a word of guidance to our customers. If you're looking for quick trend reversals, always begin with the lower time horizons first. So if it's quant grade, monthly, quarterly, yearly, right? The longer the time horizon, the longer it takes to change because you have to have a huge trend reversal to really change the yearly grade versus other grades, right? So looking at this here, we have, Ethereum is pretty high, 90% for the monthly, quarterly as well, yearly, not so much, right? Now, that does not mean that we think Ethereum is bad. We're just saying from purely looking at the performance, we think in the next 1 to 3 months is where most of the, I would say, is where most of the gains are coming from, or we expect to come from, right? So basically, after 3 months or so, Ethereum might not be the best hodl, so to speak. Now, that does not mean go out there and sell everything. We're just kind of, from looking at all the different metrics and all the other coins in the system, the best time to be in Ethereum is the next 1 to 3 months, essentially, right? Bill, any further comments?
When it comes to ETH, I'm going to stick with a lot of my chart work on this one. I mean, so here's how I do it when quant and charts sort of conflict. I'll come up with a point on charts. I think with ETH, it's like 505. I think if ETH is holding above that level, it's okay. And if not, then something might be wrong. And you've got to pay more attention to, say, the quant warning signals, right? So, I have to do what you have to do. I have to put the signals from the AI together with any work that you might do or I might do.
All right. Thank you, Bill. So if you want to check out all those grades and Bill's work, be sure to subscribe to Tokemetrics. Once again, we have 40% Black Friday, Cyber Monday code available that expires tomorrow. Coupon code is anniversary 2020, all caps, one word, anniversary 2020, and that's the number 2020. Okay, all right, let's get back to stream. So next question. Hello guys, what do you think about synthetics? Protocols in the crypto space like SNX and UMA. I love them. I do own synthetics, and I'm also yield farming that. That was basically a trade that turned into a hodl. And now when the quant grade liked it, I said, you know what, let me keep it, right? So we have SNX on the yearly, quarterly, and monthly. So it's pretty good. It's pretty good. And if we go to UMA, let me take a look at UMA. Okay, UMA. Why is there no yearly for UMA? Okay, I have to look into that. Okay, UMA as well, monthly and quarterly. Monthly is looking good. For those who don't know, synthetics, I guess maybe Bill, this comes from traditional Wall Street as well. But I think this is the future of DeFi. I think because for all these institutions to come in, they want derivatives. And that market is huge. I think it's huge. And UMA and synthetics are definitely two good projects that our team has gone through. We've done code reviews on, and the tech is solid. These are projects that we think will be at the top once the dust settles when it comes to derivative exchanges, because they're decentralized, they have good tech, the community loves them, they have good backing. So I love them. Bill? We can't hear you, Bill. You're on mute.
Whoops. Let's take a look at, we looked at synthetics. So let's take a look at UMA. I've been following some of these smaller altcoins closely. Okay. Now, this goes back to our thinking that the bigger the base, the higher in the space, right? So UMA came down. All right. It's sitting here and it's right on top of its 21-day moving average. That's the green wavy line. So this is the Sunday after Thanksgiving that you're watching this. To me, this looks like it could take off, right? In other words, there's this idea out there that there are a lot of coins that are underappreciated, right? So you're describing what these coins can do from a fundamental point of view, that institutional investment in the big coins could trigger some good things happening in the smaller ones. I think this is definitely a candidate. I think it would be on the upside if it ever got above 9.5. Okay. Because one other thing I see here is it looks like, people who got caught with a bag when it went down. Okay. So if you bought it at 18 and it goes down to 6 and it pops up to 9, it looks like a great sale. Okay. And a lot of times what I've seen with these alts that sort of fall apart like this and then base is that once the people who are done liquidating their bad trades, when they're done, that's when it moons. So sometimes the longer it takes to get going, the more powerful the rally. So again, it's the Sunday after Thanksgiving. I think there's a lot of reasons to like UMA. We covered synthetics earlier. Synthetics shows up, or it had showed up on a lot of our quant grades as being decent. That's why I actually started looking at it. So again, there's a lot of stuff out there that's underappreciated that hasn't moved. Like UMA, I'm pretty sure is available on Coinbase. So the day that thing gets discovered or rediscovered, right? It traded at 20 once, it can trade at 20 again.
Yeah, absolutely. Absolutely. Let me see if I can pull this up. So I have played with UMA in the past on their testnet. They have a token builder where you can go and essentially create your own synthetic token that follows an asset. So for example, you can create a token that follows Tesla, right? So, I mean, because I think that's the future. Once we get stocks and other equities, other assets into crypto and get them tokenized, people will be using these synthetic tokens to do that. So it looks like their site is down, or the token builder is down. Not sure if they changed the link or something, but I highly encourage everyone goes and checks that out. I have read the white paper. It is pretty interesting, but this was what I used in the past, but this is not working for me. Not sure if my router or something is blocking it, but definitely worth looking into, right? Because imagine you want to trade Tesla. How would you do that? Well, they're basically building a decentralized platform that lets you do just that. You can create any, let me go back to their homepage. You can create basically any token you like. Just think about how powerful that is, right? So right now it's still pretty technical to use. And they also have a kind of workaround or solution to the Oracle problem. right? So which is pretty impressive. So worth looking into. This project did a 15x back in August, and then got onto Coinbase. So I think it's definitely one to keep an eye on. One, because when DeFi 2.0 happens again, I think this could be one of those catalysts. This and synthetics. I don't own this yet, but I do own synthetics. So tell us what you think. Are you bullish on any of these coins, on UMA or on synthetics? Tell us down below. And be sure to join Tokemetrics to keep an eye on the ratings as this changes daily, whether you're trading it or investing it. Okay, all right. On to the next question. Okay, thoughts on Stellar Lumens working with IMF to create digital wallets and CDCs? Okay, is this happening? I'm not sure if. Okay, I haven't been keeping an eye on Stellar Lumens like that. Let me just do a quick search on Google. Stellar Lumens. Okay, Stellar Lumens first stablecoins in Brazil and Argentina launched. Okay, that's interesting. Okay. I mean, Stellar has been on a tear recently, that I know. So let's look at this. 2 new stablecoins have been introduced by Cero Network on the Stellar blockchain. The partnership between Stellar and Cero Network strives to make cross-border payments easier and faster in Argentina and Brazil. Okay, not sure if this is really central banks, though. But Bill, what does the TA tell us on Stellar as you pulled that up? I can also do a quick look here. So monthly, it's looking good. Quarterly, all right. Yearly. So pretty much Coinrate is bullish on crypto for the next 1 to 3 months, right? Anything longer than a year is super conservative. Now, when we say that just to kind of reiterate, that does not mean we aren't bullish on crypto. We're just saying if you're going to hold HODL for a year or longer, the ones we would really HODL right now would be Synthetics, QuickChain, Chainlink, and Theta. And the rest are basically stablecoins, right? So everything else might not really be the best long-term HODL. Now, things could change, but right now, where the market is, that's what it says. Then Gian says made in Brazil. All right, that's what's up. Looks like Aaron as well. I love Brazil. I went there for the World Cup back in 2014, my first World Cup. So I had a blast there. Okay, Bill?
Okay, so Stellar. This is another theme that, we've had on the show before. It's this idea that central banks may not necessarily want to build their own blockchains, that to create, wallets or sovereign coins, they may partner with the private sector to do it. Okay. And that means a lot of these blockchains like Stellar, Cardano, EOS, right? Look at what happens here. I drew the head and shoulders pattern on Stellar. I think I put it in a couple newsletters and I kind of just forgot about it. And then you wake up one day and Stellar's just gone, right? So, technically Stellar can go to 25 cents, right? It's past the head and shoulders bottom target. It's above the 21-week moving average. It's the Sunday after Thanksgiving. And when something that has this like visually appealing, like 25 or 30 cent or 50 cent price, like XRP, when things like this start moving on real news or on the anticipation that, again, the XRPs, the EOS, the Cardanos, and the Stellars are going to be partners for governments, Tezos too, right, are going to be partners in, tokenizing fiat currencies. I don't know. I mean, it goes up until the last guy jumps in, honestly. So, I mean, Stellar can go to 25 cents, but I think the larger point is there are a lot of underappreciated currencies. There's a lot of underappreciated DeFi tokens, and there's a lot of underappreciated blockchain projects. You know, a lot of that stuff was given up for dead. Everyone's like, oh, there are too many bag holders. You know, we talked about EOS before, showing up in some of our quant model portfolios. That could be next. So yeah, you know, when something like Stellar and XRP take off, take notice. Try to figure out what the next one is.
Yeah, absolutely. Absolutely. So actually, I want to pull this up here. So Stellar is in one of our indices. So if we go to Value Investor, quarterly, Kraken, that does have Stellar, 5%. So for anybody out there who's trading or investing on Kraken, and specifically Kraken, maybe look into the Kraken indices. So that likes Stellar and XRP as well. All right, so tell us what you think about Stellar, XLM. Where do you think it's going? What's your price target? Down in the questions below. Sorry, down in the comments below. Okay, all right. Now let's go back to the AMA. All right, do you think the US will finally warm up to crypto with the new administration, or will startups continue to go overseas for fear of strict regulations? Wow, I mean, I think, so I'll answer this, then Bill also can chime in. So, because as a blockchain company in the US, this is something that definitely affects us. So we've been speaking with our Securities Council for over a year, specifically on this crypto regulation in the US. And what he told us was anybody besides Jay Clayton is going to be better for the US, because Jay Clayton has basically been like the Antichrist. He's basically forced all crypto entrepreneurs to go offshore. I mean, to a point, even us, we've had to have offshore entities for, I mean, because I had one back in Ireland. We also had 100x that was offshore, that was in Hong Kong and Cayman. So crypto regulation there's been lack of clarity. And lack of clarity is not good, especially when you see people now still being sent lawsuits, threatening to go to court, jail. For example, BitMEX. What's happening with BitMEX? Arthur Hayes, an American, is now possibly has basically been indicted. So all this unclarity does not help entrepreneurs wanting to innovate here in the crypto and blockchain space. So until there's really been clarity, I don't think it's going to change, but we are optimistic because now there'll be somebody new in power, basically in the SEC, possibly even the CFTC. I've not been following that part of the I guess of the country. But the other thing I'll add on is these rumors about crypto regulation for non-custodial wallets is not helping. I don't think that's helping at all. I think if anything, that's making things worse to a point where if you're a US company, it might just be easier to just keep on doing what you're doing, especially for exchanges and just blocking US access. Bill, what do you think?
Okay, so I think there's going to be a balance. You know, I think if the primary job of government is to protect the people, then, you know, law enforcement and regulators have to be able to make sure nobody launders money and people pay their taxes, right? As legit people in the crypto space, we want regulators and law enforcement to be as happy as possible. Okay. We don't want them to wreck the space, but you know, the more integrity the crypto market has, the better it is for all of us. Okay. Now, governments are realizing, and I think PayPal is perhaps solving a lot of this problem for them, is governments know that people need to protect their purchasing power in this environment, right? Like our show starts with what's going on with Bitcoin and what's going on with ETH. And the evening news starts off with what's going on in politics, the virus, lockdowns, unemployment, etc. So governments have bigger problems, and crypto can help solve those problems. It can help protect people's purchasing power. The intelligence community wants people to have more than one choice for currencies in case of a problem. So again, crypto has a value proposition that now stretches across big funds, retail, national security. Let the regulators clean it up, but I think it's only got to get more friendly because, the writing is on the wall that everybody benefits from a crypto market that works and goes up.
Absolutely. I mean, everybody definitely does benefit when we all go to the moon and beyond. I mean, even regulators, because they get tax income.
That's right.
All right. So tell us what you think. Do you think regulation is going to change now that there's a new administration? Share your thoughts down below. Okay. All right. Back to the AMA. Okay, here's a question. How is it that gold is dropping while Bitcoin is running up? Is it a stretch to say that folks are selling gold for Bitcoin? Yes. I mean, we've kind of dealt with this with actually our own, just people in our network, high net worth individuals telling us we want to sell gold for Bitcoin. And Bitcoin is the new gold. Bitcoin is digital gold, has the same properties of gold, but more efficient. It's like if somebody could design gold but make it better, that's Bitcoin. And Bitcoin is easier to custody, to transfer, and just invest in. Bill?
Okay, so we've gone full circle, right? The gold guys, Rickards, who wrote the Currency Wars books, they had a field day with Bitcoin on the way down in 2018. Okay, now people are starting to say, okay, I'm giving up on precious metals to go crypto. Now, I've always been a big fan of we're all doing the same thing. We all think the same way, right? So I think if people are dumping gold specifically to get in crypto, I think that's a bad reason to dump gold. It could probably create a buying opportunity in gold and silver, because I do think there will come a day where you'll be depositing your gold with, say, the state of Texas depository to keep it safe from any federal confiscation. And you'll be able to write checks against that precious metal one day, just like having, crypto in your PayPal account. So I do think there's room for precious metals. There may be a frustration trade going on right now, but frequently those frustration trades, when they end, people go, oh man, maybe I just should have kept a little, right? So
Right.
yes, crypto, we're pro crypto, but I'm not going to make the mistake or the poor etiquette of trashing gold the way the gold guys trashed us.
Yeah, I agree. Now, even though I don't own any gold, our indices love gold. They love gold as a hedge for crypto and the dollar. Let me see if I can pull this up here. Give me a second. Okay, so if you go to pretty much every index on Tokenmetrics, every index has exposure to Pax Gold. Why is that? Because, and this also answers a question we've been getting a lot, because people are saying, why aren't the indices just getting all the top coins and just putting them in that index? Because that's not what smart investors do. Because, for example, right, if you go here and say, just show me all the quarterly, actually quarterly likes lots of stable coins, but let's do, let me see which one. Okay, let's do monthly, right? Why not just get the top 10 and call it a day? Well, one thing when it comes to building a portfolio, you can't just invest in silos. You have to look at the total correlation of the entire portfolio to see if there's any downside risk and any risk in general in the portfolio. What does that mean? Because why invest in two assets if they pretty much follow the same movements, right? Meaning that if one goes up, the other goes up. If one goes down, the other goes down, right? It will be much better to have an asset it has possibly close to the same return, but is uncorrelated, meaning that if Bitcoin goes down, it goes up, or it does not go down as much, right? So that's what the portfolio is doing. It's looking to hedge, because if we go back to September, when the market went down, almost every crypto went down. But guess what didn't go down as much? Gold, Pax Gold, right? So going back to the indices factors in both the ratings, so the quant grade and trader ratings, but also tries to build a fully diversified portfolio, a portfolio that will weather the storm no matter what the market is. Whether the market is going up or down, it will perform well. Right? That's the idea behind the indices. It's not meant to maximize 100x gains as quickly as possible, because while those could happen in crypto, there's a lot of risk that comes with that. So you want to have a portfolio, kind of like, maybe Bill could speak to this. Ray Dalio has his all-weather portfolio, I think it's called, right? Basically, a mix of stocks and bonds. So think of as the indices as the all-weather indices. Our goal is to give you a portfolio that will perform well when the market is booming and will protect your wealth and capital when the market is crashing, right? For example, looking at this here, this pretty much is a very conservative portfolio, actually, but it has Bitcoin, Ethereum, and Pax Gold, and the rest is stablecoins, right? Now, we've already kind of shared our thoughts on stablecoins. You don't have to have all these stablecoins, but it's basically just telling you, have money in cash, whether it's in one stablecoin, a few, or US dollars, but have basically for the next month or so, the best portfolio for risk to reward ratio that's conservative, but will also give you upside, is holding Bitcoin, Ethereum, and gold, essentially, right? So I want to put that out there. Now, that should not be confused with the ratings here, because these ratings are for people who want specific trades, right? Somebody who wants to trade for the next month or so. This is what it's basically telling you. It's telling you look into all these different assets. Bill, your comments?
Okay. So when it comes to building a portfolio, right? In other words, our analytics, they're really sophisticated, and they're taking things into account through math that say you could also come with via some common sense. And when common sense matches math, it's a powerful idea, right? So, I've gone through kind of the astronaut case for crypto by looking at things like Chainlink and Ethereum, right? Ripple. But, there's also this idea that, lockdowns, presidential inauguration, issues about the election. I mean, can you imagine the reversal in the US dollar if somehow Donald Trump continued to be president? Right? I mean, depending on what blog you read, these things out there in the normie world, they matter. Now, our quant models are sophisticated enough to pick it up. So then as the token metrics human analyst, how do I put it all together? Well, you could say, hey, I want to have some Bitcoin. I want to have some Ether, maybe some Chainlink or some XRP or whatever your favorite coin is, really, right? You can have half or 60% in your favorite coin, just the way you'd have 60% in stocks in a 60-40 portfolio, right? Finance 101, they're going to teach 60 stocks, 40 bonds. Our AI is suggesting something similar. Your favorite coins and money in cash or in stable coins. Now, you can keep the money in stable coins. And the logic would be, hey, if DeFi 2.0 takes off, I want to make sure I can be there to get in on UMA, Bancor, or any synthetics, or any of these smaller alts that take off, right? Because again, there is uncertainty out there. So I have a lot of bullish charts and I like to present those because I get excited about that. But there's a reality out there that, it makes sense not to have all your chips pushed in at this time. Okay. And there's also the idea that, we're coming up on obviously the end of the week. We're obviously coming up on the end of a month, right? So I'm interested to see how quant grades change, right? And if they do change, having some capital available to make some moves makes sense.
Well said, Bill. Okay, so comment here. The price of gold gets suppressed by investment bankers. to keep people from panicking, in my opinion, says Awoken on YouTube. All right. Well, thanks for that comment. I'm not sure what to think. I guess, Bill, what do you think about?
There's not enough. It's it's the worst kept secret in the world that there isn't enough physical gold in the world to fulfill all of the paper obligations. So everyone who has a piece of paper that says I own gold, you may not. And that could include gold deposited at a central bank like the Fed. Okay. There just isn't enough physical metal out there. So there are theories that, the price is suppressed because, God forbid, gold ever went to 5,000 and everybody wanted to take delivery and it's not there. So that's a historic problem in gold. I don't know how it gets solved. I don't know if the price is manipulated. I'm a crypto guy, right? But owning gold and physical metal in an environment that's as uncertain as the one we're in, particularly when we're talking about potentially a U.S. administration that could like indiscriminately print money. I mean, the QE, the perma QE Fed chairman Janet Yellen is now in charge of the Treasury, and they're selling gold. Yikes.
Yeah.
So for what that's worth.
All right. A few comments here. Yes, Quant Grade went live on Friday. Illick says banks were fined for their manipulation of gold and silver. All right. Thanks for sharing that. Just curious, did your model see the XRP and XLM run up? I got lucky with HODL for 2 years. Yes, they did. So we actually do have videos on our channel for the last, I think there were 1 or 2 weeks ago, covering XRP and XLM. So go back and watch those videos. Congrats to everybody. Even Bill's TA was very, very bullish on XRP for a while. That's why that video has been one of our most popular videos this month.
Right. Specifically, what happened with XRP is I took a look at the chart, and then as XRP started to run up, it showed up in the Token Metrics day trader portfolio. So that's when I said earlier in the show that sometimes stuff will pop up in day trading and the long position can turn into a hodl because it takes off.
Yeah. So
that's why I'm paying extra special attention. I actually start my day by going through all of the daily portfolios. Because ironically, that's been where, that's where our AI is the quickest to pick up stuff that's changing. Right.
Yeah.
So again, for what that's worth, right? Like I looked at Binance, Coinbase, all of them, looking for ideas.
Right. And we highly encourage you to take advantage of the 40% off that expires tomorrow at the end of Cyber Monday. That code is anniversary 2020, all caps, and the number 2020. You get 40% off of Token Metrics. That can be applied to the monthly subscription. It's a one-time use coupon. So if you do it for monthly, you won't really be getting the maximum benefit because you're better off applying it for the annual plan because you get both 25% off for the annual plan plus 40% off. So massive, massive, massive savings you get. Then, okay, comments from Tom. JP Morgan settles lawsuit that accused firm of spoofing precious metals markets trades, published September 29th, 2020. Okay, the bank is also nearing a settlement of $920 million to resolve government investigations for similar alleged conduct. Yeah, I mean, thanks for sharing that. I mean, wow, that's a lot of money. But all right. So be sure to tell us what you think as well down in the comments below. Okay, let's go on to the next question. Okay. Have the markets moved past the COVID fear, or is another drop like March in the cards? I'll defer to Bill. Bill, so basically, is the market ready to fully bounce back, or are things going to get worse?
Okay, so this is a good question. All right, we had this theme on the live stream, back in March, where I would start off by saying I've got I've got to talk about the markets. I've got to be a doctor. All right. Now with the virus, I think markets have tied problems with the virus to more QE, right? I don't know if they can hand out money the way they did the first time. I certainly know that the $1,200 that they gave everybody, isn't going to solve a 3, 6, or 24-month problem with this virus, right? The only entity inside of governments that can respond is central banks. So the bigger the virus problem, the longer it persists, the more money the Fed has got to just push into the system. And frankly, rightly so. I know we give central banks a hard time in the cryptoverse, but let's face it, the primary job of government is to protect the people. So if the only way to protect the people is to push money into the system, they're going to do it, and they should do it, right? And that enhances the value proposition of crypto in people's PayPal accounts and elsewhere, right? So even if they do regulate wallets and do things like that, at the end of the day, folks, the virus is not going away, right? It's not the common cold. It's serious. Now, the death rates are down, okay, but the way it spreads and what it can do to your body after you've had it, like I said, it's serious, and companies are reacting to it by laying people off. So could that create a problem with equities eventually? Yes. Is the Fed know? Does the Fed know? Does Janet Yellen know? Does Jerome Powell know all these things that I'm telling you? Oh, yeah. Oh, yeah. And they're not going to let it all collapse again because, the world can't afford a 40% stock market calamity and 15% unemployment.
Okay,
At that point, it's a national security issue.
But to kind of look at the other side, because I think I definitely do agree with everything you said, but it also scares me because just think about this. Basically, they're just going to print money indefinitely. And to me, that's scary because people will be losing their wealth without even knowing it, right? The price for a gallon of milk, the price for groceries, everything is going to go up. It's almost like we're on a pathway towards Venezuela without even knowing it. Obviously, I don't want that to happen to the US or to any developing country, but if they're just printing money indefinitely with no end in sight, how can we not end up like that, right? Because that's why people are in crypto. But I feel even more scared for people who are not in crypto. Because if they print money, obviously we benefit because we have Bitcoin, Ethereum, crypto, right? So if anything, we'll be on our yachts. But the people who don't have crypto are basically losing their future, right? And also the future generation's wealth, right? So to me, it's pretty scary. What do you think about that, Bill?
Folks, I have been pounding the table on crypto as a mechanism for people to protect their purchasing power. This is why I think PayPal being involved is so powerful, and it may not be an accident that PayPal is getting involved, right? This idea about the price of food, this idea about, goods being really hard to get, right? Like the webcam you're looking at me on right now, it took me 3 months to get it. Okay. Sometimes no matter how much you're willing to pay for something, you just can't get it. Supply chain disruptions, etc. So I understand that there are risks, but at the end of the day, the Fed cannot afford the optics of everything crashing in its face. Is that eventually going to create a problem?
Right.
Yeah, it's already created.
Yeah. But I feel like kicking the can down the road makes the problem bigger. Maybe it's the libertarian in me, right? That's why I love crypto so much. But I feel like we should just take our medicine now, then take it down the road when it's going to get bigger and bigger and bigger. right? Because artificially inflating the economy to save optics is not gonna help when people are losing their purchasing power, right? Because when quick comment here from our audience, Jason Jackson says people will figure it out, but probably too late. It will create a level of inequality that people would eventually not tolerate, would be my guess.
Right. Now that's an extension of the conversation, right? In other words, when we should have taken the medicine was like 2013. In other words, QE was implemented in 2008 as an emergency measure. And then to save optics, they continued it to the tune of about 4 trillion, 4.5 trillion.
Yeah.
That's when we should have taken our medicine, because now we need it for the real emergency. So yes, I think people have already figured it out. And I think when you see people FOMOing into XRP as an example, they're looking for ways to make money, but they're also going to be looking for ways to protect their purchasing power.
Yeah, absolutely. A few comments here. Daniel says, Jason, it's already kind of playing out like that. I think crypto is a sign of people having had enough. Yeah, absolutely. Absolutely.
Absolutely.
Then Kingston says, it's criminal not to be in crypto at this point. I lost money in crypto in 2018 and 2019, but I kept investing. No guts or risk, no glory. I don't feel sorry for anyone at this point. Yeah, I mean, well, glad that you're still in crypto, but I mean, that's why I think that's why we have our channel. We're doing this for free on a Sunday. I could be watching football, watching, I don't know, sports, playing video games, or with my family, but we're here trying to evangelize and tell people. I feel, I feel in a way we're kind of like, who's that? Noah on the Ark, trying to get everybody onto this crypto rocket ship and tell them that, I mean, not the floods is coming, but inflation is coming, right? People are about to lose their purchasing power without even knowing it. Because people are seeing this in Africa and Venezuela, but this is coming to the developing world with QE. All right. So, I mean, so please share this video and get all your friends who doubt crypto, have them watch this segment. Have them watch that crypto is the future of money. I mean, kind of as Jason said, it's criminal not to be in crypto at this point. I mean, because when you see institutions, whales, hedge funds, who hated crypto and now are getting on board, as Bill mentioned in the market update, Guggenheim is launching a $5 billion fund and wants to allocate 10% of that, 500 million, to buy Bitcoin. That's 2x. That's twice as much as any position they have, I believe you said, right?
Right.
I mean, that's not happening by accident. All the whales are seeing this happen right before their eyes. That's why they're all hedging into Bitcoin and crypto. So we definitely need to share this and get everybody onto this crypto arc, this crypto rocket ship, right? Jason says, we're very thankful and grateful daily. Here we are, ready to receive and grateful to be a service of others. Yeah, absolutely. Absolutely. All right, so be sure to share this with your friends. Have them watch this and tell them. I mean, tell them crypto is here to save them. Crypto is true economic empowerment. Because now anybody, no matter where you are, you can escape this inflation game by becoming your own bank, banking yourself, right, and taking custody of your own money. Kingston says, I like the ARK analogy. Yeah, absolutely, absolutely. I mean, because a flood isn't coming, but inflation is coming, right? And I think anybody out there who knows Noah's Ark, even though it's been forever since I've gone through that story, the same thing's happening in crypto. We need to get all our friends on board, otherwise they might not survive, right? Because for me, why I love crypto so much and just this mission we're on, it's not just about making money, it's about getting others to make money as well. And maybe making money is not the right phrase, maybe just maintaining your purchasing power, right? Because think about this, what good is it for us to be on our yachts because we did the right move if everyone around us did not do the right move, right? Because I mean, that to me is actually not it's not cool, because what good is it to have everything you wanted in life if you can't celebrate that with your family, your friends, and people you love, right? Because I don't want to be that rich person by themselves on an island. I want the whole island to be rich, right? And I think that's why people love crypto so much, and because crypto is true economic empowerment for everyone, right? So definitely spread the message. Any last comments, Bill?
Yes. So when it comes to crypto and when it comes to investing in both crypto and a token metrics subscription, fortune favors the brave. Okay. It's a classic old school saying. And if you're going to protect yourself in this environment, not only protect yourself, but try and thrive. Okay. Crypto is where it's at. And we would love it if you would stay with us and become customers so we can do everything we can to help you. One final comment. You know, technical analysts, if you see a technical analyst in a $3,000 suit, run in the other direction. People become technical analysts because they want to help other people navigate markets. All right. And I'm one of those people. And I want to help you both on the stream and as a customer. So join us.
All right. Thank you, Bill. A few comments here. People are saying they're trying to subscribe, having issues. If you're having issues, contact customer support. Just go to the bottom chat and the bottom right of the corner. Let me pull up my screen and let me show this real quick. So if you go to the site and you're on the site, down here, click support, then open up a ticket and do send us a message. As you see here, we typically respond within 3 hours. It might be slower on the weekend, but our team is still pretty active. So just come here, send us a message, or just email support@tokenmetrics.com, and we'll take care of you. And then Abraham says, kind of confusing of 10% discount here, 20% there. I don't see the 40% anywhere. So it's a coupon code you have to enter. So let me share this again. Once again, this expires in basically 24 hours. So this is a promotion for our 1-year anniversary. Last year we launched on Black Friday, which was the 29th of November. So 1 year ago we launched and we're going strong. We now have customers in over 50 countries, helping them. We're kind of like Noah, right? Bill and I are Noah, getting people onto this cryptocurrency arc, evangelizing and helping people maintain their purchasing power by investing in crypto. So if you just come here, go to pricing or basically any page and just go to checkout, pick the plan you'd like to subscribe to. The most popular plan is the investor plan. So here's the pricing, right? This is monthly. If you choose the yearly, you get 25% off. But here's the cool thing. If you add, so let me pick the investor plan here just to show you. So if you add that coupon, anniversary 2020, that's all caps. So let's go here so I can show you, right? So all caps, come put in your payment information. So anniversary, I was going to take my, okay, 2020, apply. It will add an extra 40% off. So massive savings, as you see here, right? So as opposed to paying almost $1,200 a year, you'll be paying pretty much $540, right? And we also have a 1-week trial, right? Discounted trial for just basically $2. You can try it for 1 week. Don't like it, that's fine. And we also offer a 30-day money-back guarantee, right? Because we want to make sure that if you're hopping onto this arc, you like the research we're giving you through Bill's newsletter, through our ratings and grades, because obviously getting onto the arc by yourself is tough. So want to make sure you have the best research available. And that's why we're giving you this coupon for 40% off plus 25% discount if you pick the annual plan. And if you don't like the research or don't have the money, that's fine. We have our content for free, right? So this is not just trying to kind of do a high pressure sell event. I mean, just watch the live streams for free. Tell your friends to watch the live streams Sunday, 6 p.m. Eastern time. We're going for usually 2 to 3 hours every single week. This week we had a live stream on last Sunday, on Monday, Wednesday, Friday, Sunday, and we have one more live stream tomorrow as well. So definitely be sure to watch that as well, right? So just get people into crypto, get people on the ARC. That's all we're asking you to do. All right. So that being said, let us know what friends you're getting onto the ARC, because we all need to be wealthy together, right? Or we all need to have our purchasing power together, because being blessed and fortunate because we made the right move when the people around us did not, it's not really a good environment, right? Because a rising boat lifts all tides. Well, if we're rising, we need to lift everybody with us and get them onto that arc. So thank you, crypto family, and definitely spread the word. Okay. Let's get Peter Schiff on the arc. Hey, let's get him on the arc. Let's get him on the arc. Absolutely. Yes, we have a 30-day money-back guarantee. So if you purchase within 30 days, you basically have 30 days to get your money back, right? And we'll give you a full refund, no questions asked, within 30 days of when you subscribed. Okay, all right, let's get back into the AMA. But whoever asked that question, that was a very good question. Got us onto a tangent. Okay, so people are asking about Icon. All right, Icon is growing. How bullish are you after the AMA with Min Kin? So I've kind of shared my thoughts on this. I mean, Icon, we've done the code review on it. It's good technology, but ever since it peaked back in January 2018, it hasn't really, because it peaked at $12. And last time I checked, it was around 40 cents and hasn't really done much since. Let me see if let me just quickly pull this up. Asbil also pulls up the TA on Icon. Okay, so on the monthly, grade is good. Quarterly, all right. Yearly, so it's pretty consistent with everything. Pretty much for the next month or so, definitely worth looking into it. Bill, what does the TA tell you on Icon?
Okay, coming up right here.
Okay.
Okay. So the green wavy line is the 21-day moving average. It's the Sunday after Thanksgiving. Now, I don't know if from a technology point of view, Icon is one of those underappreciated projects, but I am noticing that we've got the start and then the correction. And then it's got a start and then a correction. So this goes back to this, I don't know, this moon theory that I have that, you know, an alt can start and stop and then start and stop. And that's, in Elliott wave terms, that can set up the idea of a much bigger move. So could Icon go to $1? Yes, it could. It could. Now, should it be at $1? I don't know. But this whole stop start thing and stop start combined with all of these underappreciated coins everywhere, I don't think I would exclude Icon from that group offhand. You know, some coins are better than others, but it looks like it wants to join the ranks of these underappreciated coins that all of a sudden have people pouring back into them.
All right. Thank you, Bill. And just to add on to that, I mean, why Icon is good, the market is more competitive. You have Polkadot, you have Cosmos. Those are two projects we are definitely more bullish on from a technology standpoint, right? And I think the market also agrees as well from a market cap and just development activity standpoint. But the Icon community is amazing. A lot of people in there, right? So definitely, I mean, never rule Icon out, but no, I think the market is just more competitive. Polkadot has really taken the throne, right? It's basically at this point, in terms of interoperable blockchains, it's Polkadot's race to lose, followed by Cosmos. Icon is probably third. I think Icon is definitely better than Aeon and Monchain. And then there are a few other projects out there trying to also kind of do the same thing, but I think those are the ones to keep an eye on. But Icon is definitely formidable for sure. So tell us what you think. Are you bullish on Icon, ICX? What do you think it's going? Share your price predictions down below. All right, let's get back to the stream here. Okay, how would a second hard lockdown affect inauguration? Hard lockdown after inauguration affect the markets? Oh wow, Bill, how would a lockdown change everything?
Okay, so I know these are somewhat morbid subjects, but I am glad that people are bringing these type of questions to the stream, because I think we've just got to talk about them, right? I don't know if lockdowns work to stop the spread of the virus, because as soon as they unlock everyone down, everyone gets on a plane, goes on vacation, and it starts all over again. Okay. Americans really aren't good at having their freedom impaired in any way. So I think if they do lock the country down, you could be looking at social disorder, right? That's at people who protest, and protests can lead to people getting really upset. And we all know that, that can lead to people hurting each other, right? It's really unfortunate. Now, with that said, the people who wear the suits and sit in the government buildings at the Fed, they know this. And they have probably got a massive program queued up in the event that some sort of lockdown has occurred. I made kind of a joke out of it, but the fact that a former Fed chairman was nominated to run the Treasury is telling you the US government is getting ready for, I don't know, let's call it the worst. Okay. So yes, there could be a crypto hiccup if they regulate wallets. But the bigger picture, folks, is that crypto is one of the only things that you can take to try to protect your economic viability in the event of a lockdown, social disorder, protests over a wide variety of policies. There's a Senate runoff in January, folks. This is coming up, right? Tax policy and control of the U.S. Senate will be determined in the state of Georgia, which could be followed by a lockdown. So there is potential for a cascade of events that could be negative. Now, on the show, it's Crypto Family. We like to keep it positive, but there's a lot of negative stuff out there, right? Frankly, I see crypto as a necessity, right? Necessity is the mother of invention. So if you don't know about crypto, people are going to figure it out really, really quick. So if the news is negative and if there's a lockdown, I don't see how you're going to be able to buy groceries unless you got crypto and a PayPal account. I'm going to be honest with you. This, of course, assumes you can go to the store safely and the store has the stuff that you need, right? So I don't talk about this much, but as people bring it up, I mean, if you're going to survive and you want to put together sort of a survival mentality, crypto has to be included in that.
Yes, absolutely. Crypto is the future. Crypto is how you get on the arc. So definitely be sure to share with all your friends and get them on board the arc to help them just maintain purchasing power and not get robbed of their future and their wealth. All right, so thank you, everybody. We appreciate that. Keep them coming. A few comments here. Somebody's asking for reviews. Yes, so go to tokenmetrics.com/reviews. We do have reviews on Tokenmetrics from our customers. Definitely do check that out. We added this based on people's input, right? So at the homepage reviews, you can check out all the reviews and what people have to say about Tokenmetrics, how they find value from it. So definitely do go check that out if you want to kind of just learn more about that. And once again, the code is anniversary 2020, all caps, anniversary 2020, gets you 40% off of Tokenmetrics. That's a one-time single-use coupon that expires tomorrow. Okay, Griff says, just boarded the ARC. Wow, this place is amazing knowledge, is power. Thanks for the fishing rod. Time to catch some fish. Yes, absolutely. Right. So whether you catch fish with the content on the live streams or with our newsletter or our platform, just we just want you to catch a fish. Right? We want to teach you how to fish and catch a fish, so that when the flood comes, you have all the fish you need, right, to last you through that flood. All right. So keep the comments coming and be sure to smash the like buttons and share this with your friends. It helps with the algorithm and also helps us know how we're doing. Okay. All right. I think let's take a few more questions, then we'll wrap this up. Okay, this is a PayPal question. Will we see fractional reserve banking for Bitcoin, with companies like PayPal now offering what seems to be paper Bitcoin and CBOE becoming the biggest non-physical futures platform? Scarcity or meme? Oh, wow. I did not think about this one. Fractional reserve banking for Bitcoin, all these companies. I mean, anything is possible, but but the cool thing about crypto is we have options. Assuming they don't block off or make it tough for us to custody our own funds or illegal, crypto, we can always bank ourselves. That's what's refreshing about crypto and blockchain. We always have that option, right? So, because I think, yes, let's say some company like PayPal ends up having fractional reserve banking. I think the hardcore crypto people would avoid it, but the people who don't really care will still use it, to be honest, right? Because that doesn't stop people from using the banking industry. Bill, what do you think?
I was like, wow, fractional reserve banking on the live stream. We have arrived. Uh, I think rather than going to fractional reserve banking for Bitcoin, it kind of assumes Bitcoin is the only thing out there, right? There are lots of other cryptos that can act as medium of exchange without necessarily going to fractional reserve banking just for Bitcoin. Now, on that subject, someday they may have to do that. I saw a tweet once that says very soon it will be cheaper to buy a company like MicroStrategy that holds Bitcoin than it will be to go out and try to purchase it in the open market. So this idea that Bitcoin could become so scarce has merit. How it plays out in the market, in my view, is that literally all these other coins, Litecoin, Bitcoin Cash, Ether, Ripple, Dash, Tezos, all these other forms of money are just going to moon, right? Like 2x. Just the whole market, before you can go to fractional reserve banking on Bitcoin, the entire crypto market has to be repriced.
When that happens, pretty much everything, I would say everything good, everything of value would smoke to the upside. Not financial advice, but just kind of what we believe in our opinions. All right, so definitely be sure to get everybody on board, because it's going to be a great time to be in crypto. But when we all make it based on being early, we want to make sure that we told all our loved ones, our friends, our families, people that we want to share those, I would say, those gains, those good times with. Because if you're on a yacht by yourself, is that really a yacht? You want to be there with your family, your friends, your loved ones, right? Your neighborhood, right? So definitely be sure to spread the word, evangelize, right? We are making all of you Noah, right? So go out there and just evangelize and get everybody on the ark, and we all go to the moon and beyond. Okay, all right. So it's been quite the stream. Once again, it's our anniversary stream. So thank you, everybody. It's been a pleasure having you around here with us for 1 year of Token Metrics. We've been doing this like clockwork every weekend, the live stream, Sunday, 6 p.m. Eastern Time. It's been great having you here, Bill. Always a pleasure. A pleasure having a crypto family on board. Always love the dialogue, the discussion. It's always good, always good. And once again, the anniversary special, the coupon expires tomorrow, Cyber Monday, 11:59 p.m. Eastern Time. So be sure to spread that code with all your friends. Anniversary 2020. That's all caps, 2020, one word. Get you 40% off of Tokenmetrics. So want to make sure you take advantage of that before it expires, because it's a 1 year birthday. It's been great having you. Bill, any last words to our crypto family?
Yes, friends, we've got a lot of information that can help you. This information is on sale for the next 24 hours. Please take advantage of it because, like, household items, you don't want to get caught without it. You don't want to miss the right information and the learning and the knowledge to help you later. So please, thank you for being with us. I really enjoy this. I want to help you. We all want to help you. Join us at Tokenmetrics.
All right. Yeah. Thank you, everybody. Be sure to follow us on the podcast. Get us on the go. Tokenmetrics.com/podcast. Join the newsletter. Tokenmetrics.com/newsletter. Follow us on social media. Subscribe, share. And with that being said, as we like to end the show, the moon is not the limit. To the moon and beyond. Thank you, crypto family. It was a pleasure.
Thank you.
See you next week.